providers to acquirers to networks to distribute our QR codes, all of that across Venmo and PayPal. And of course, we announced today our partnership with CVS. And those are the kinds of merchants that we want, merchants where people shop there every day. They're, highly known merchants or use cases that people can use touchless every day. So why do I think it will be successful? First of all, as I said, it's demand versus push. And by the way, we are going to put aggressive marketing dollars behind this to make sure that consumers know they can use QR codes, promotions around it. And as John said, that's a large part of the investment that we'll do in the back half of this year. Second, merchants love the scale and the brand that we have. In the U.S. alone, we've got between Venmo and PayPal, call it 150 to 175 million people who are using our digital wallets. They can go after the Venmo demographic, and by implementing this QR code, unlike some of the other touchless, tap and pay options that have much less customers associated, here you have the scale, and that is something that they are eager to tap into right away. Third, this isn't just about touchless payment, scanning a QR code. This is about the value proposition around that. This is about being able to use rewards, being able to have the integration of some of our Honey capabilities into that, so merchants can do proximity messaging in it, offers inside of that. You can use your wallet and do full funding of any of the funding instruments, including your rewards points in that QR code. And so that's the functionality that will roll out over the next 6 months. So this value proposition is one that I really like a lot as well, that goes beyond just be safe and healthy when tapping or scanning your phone. And of course, QR codes are platform and OS agnostic, any handset, any operating system. And in terms of the economics, for the most part, it's a certain percentage, a little bit like what we have in online, not necessarily exactly the same percentage, but even at LEs, larger merchants, it'll be similar rates to other in-person rates that you have. So we think the economics over the medium term are quite positive for us. Some will be passed through, but most will be incremental economics. John, anything?
Thank you.
Oh.
At least I would just add one other thing as we think about what this offering provides for our consumers, but also the economic benefits of PayPal. It's not just in the direct unit economics that come through a point-of-sale transaction. Very importantly to us is what this will do to the overall level of engagement for consumers. So if you're using us in an offline setting, you're much more likely to use us when you have the opportunity online. So there's a halo benefit that comes along with this usage that is very important to us as well.
Terrific. Thank you. Congrats, guys.
Thanks, Lisa.
Your next question will come from the line of Darrin Peller of Wolfe Research. Please go ahead.
Thanks, guys. Nice results. Just given these substantial incremental margins, we're seeing margins overall up over 500 basis points. Can you just touch on your strategy on the balance between the investments you want to make in the business versus margin expansion? It's great to see the higher base, but when we think about, we're hearing from clients that you guys really should be stepping on the gas in terms of the opportunities you can have. So just love to hear more in terms of where you're going to be putting those dollars and the balance. Thanks, guys.
Yeah. Thanks for that, Darren. I'll start off and John can come in. Look, first of all, just in general, we invest where we see opportunity. That's been what we've done over the years. I think it's why we've had the results that we have. We could always have higher margins without investing in the business, but that's not what I think all of you and our shareholders want from us. There is huge opportunity in front of us. I think probably more opportunity than we've ever seen before. And we have the opportunity to invest in new areas of the business that we think can be meaningful contributors to our growth as we look forward, but even more importantly, meaningful to our customers, merchants and consumers in terms of the capabilities that they are asking for us. And so as John said, plus or minus, just in the back half of the year, we're investing an incremental $300 million or so. And the places we're investing in, is in-store. I just talked about that and why that's so important. But also, we want to invest in our digital wallet capabilities. We have an aspiration to be an everyday use case and to be a central part of a customer's life in the digital economy. And so in the next several quarters, we plan to roll out quite a number of additional capabilities, not just in-store from QR to tap to pay to cards, but rewards capabilities. By the way, rewards are being used much more because people aren't being able to use the rewards for travel. And we're seeing an uptake in people using the rewards points to check out using PayPal. Well, obviously, are pretty much now almost 100% complete with our Paymentus integration. The next step is bill pay into our apps, and that we intend to have probably towards the end of this year. We're going to integrate Honey shopping tools around, wish lists, coupons, rewards into our PayPal apps, eventually into our Venmo apps as well, subscription management, and other capabilities, other financial services that, I won't really go into any detail around today. But I think you can think about like a substantial change in the amount of capabilities that we offer through our digital wallets across PayPal and Venmo. And then finally, there are a couple of international markets where we think investment makes a ton of sense, whether that be China, which we're obviously investing in through GoPay. We're seeing explosive growth in Mexico, Japan, Brazil, really, frankly, across Western Europe. It's been amazing to see what's happened there. So we will invest continually in this business, and we invest what we think is the right amount to drive results. And if we need to invest more, we will invest more. And if we don't have, things to invest in, we'll return that back to shareholders. But, we've given guidance that we believe enables us to do the proper amount of investment to take advantage of the opportunities in front of us, because this is a moment in time for us.
Darren, if I can just add quickly, you referenced our margin profile in your question, and I think that's pretty important to this discussion because what we're demonstrating right now is the real scalability of our operating model. And Darren, like I frequently focus on the incremental margins in our business. How much profit did we bring in for every incremental dollar of revenue? And in the quarter, those incremental margins were the highest they've been for us ever at 50%. Yeah. But actually, I think that there's a better way of looking at that is more apples to apples, and that's if you exclude the losses related to the credit reserve and you exclude acquisitions, that incremental margin was actually 70%, 70. And what that does is result in free cash flow like you saw us generate in the quarter at over $2 billion. And so, as it gets to how we spend that, we've always been balanced between M&A, organic investment, and returning cash to shareholders, and we've also been opportunistic. And, to the points that Dan was making, this is a time that we think it's very important to invest in a lot of these initiatives because, as I said on the last call, while these trends are, seemingly changing right in front of us, we don't just want to be on the receiving end of that. We want to help shape the outcome here, and so we want to invest into that.
Thanks, guys.
Okay.
Thanks.
And your next question will come from the line of Bob Napoli of William Blair. Please go ahead.
Thank you, and congratulations on everything, on the trends. On Venmo, I wanted to follow up on Venmo. 60 million customers now. I think the last revenue number we've gotten was a 450 million revenue run rate exiting 2019. There's a lot going on, the direct deposit strategy, commercial strategy, obviously the QR codes, integrating Honey. What can you give an update on the revenue run rate, and then maybe a little color on the direct deposit strategy, or which of these strategies are going to be the biggest movers? And I think direct deposit can be a game changer, but I'm not sure your customer in Venmo is going to be easy to crack on direct deposit. So some color on Venmo and the different strategies and revenue trends would be really helpful.
Sure, Bob. It's good to speak with you. We don't provide an update on Venmo's revenue each quarter, and we don't have one this quarter. But want to say that I think across the board, this was one of Venmo's best quarters ever. We saw growth on their platform re-accelerate from the dip in Q1 to where it was over 50% growth in volume. And I think what's notable about that is we all recognize that much of the Venmo usage historically has been around social experiences. And as those have, by and large, gone away for the most part, we're seeing new use cases develop with Venmo, which really demonstrate its relevance and importance to our customer base, I think, is as good as anything. And so with respect to the monetization strategy, it's not just one strategy. It's a multifaceted approach that includes things like direct deposit to increase usage, include things like business profiles, include things like QR code, and then, of course, we're eventually launching the Venmo credit card later this year.
Right.
And we'll continue our efforts as well around the Pay with Venmo in an e-commerce setting.
Yeah, just add one quick addition to that, Bob. I would not underestimate how zealous the customers of Venmo are about living their financial life on the platform. I think each of these capabilities, whether it be direct deposit, whether it be business profiles, the credit card, and a number of other things that we'll be adding, you are being rapidly adopted. The new use cases, as John said, are so interesting to see, as millennials, instead of going to the restaurant, are now eating at home or outside or at the table, instead of going into a gym or doing fitness classes through streaming, instead of going to concerts or other entertainment, are now doing things online. And we're seeing all of that reflected in the usage of Venmo. And so I think, as John said, this was obviously its best quarter. But I think, Venmo, we're continue to invest in Venmo because it's got a really bright future and is really a crown jewel of ours.
Great. Thanks, Dan. Thanks, John.
Yeah.
Your next question will come from the line of David Togut of Evercore ISI. Please go ahead.
Thank you. Good afternoon, Dan and John. Could you drill down into the sequential tripling of the drivers of the sequential tripling in net new accounts for Honey, and any pull-through benefits you see on for the PayPal ecosystem as a whole.
Yeah. Well, I think in this economic environment, frankly, and even before this, because you had so many people struggling to make ends meet at the end of the month, and that's just been, made even worse by the economic ramifications from the pandemic. But Honey's capabilities are a perfect fit for consumers and merchants at this time. And, increasingly, I see the possibility to establish Honey as one of the most efficient market-making platforms for both shoppers and merchants. I mean, consumers get the best price on the merchandise that they want, and then they receive rewards based on that, which incents them to do additional activities, build out their demand curves, and then merchants can customize offers right into that demand curve. So they know exactly what to do to get X amount of demand off of that. And, it's really interesting when you think about, we've always known the identity of people, and we've always known that they've made purchases. What we haven't seen is intent up front, and you really have this perfect set of data that helps both sides of our two-sided network when you put all of that together. And it wasn't just that Honey's NNAs grew 3 times. By the way, their revenues were up basically triple digits or so, almost double as well. And I'd just say a couple quick things on that. One, the integration is fully on track. There's been no delays in any of our initiatives. We will start to export through APIs the Honey tool sets into our PayPal wallets and within QR codes. And this, to your point about part of the PayPal ecosystem, we hope to have a seamless one-click PayPal checkout experience when shopping at Honey merchants. And I'd just say, all in, I'm really pleased with the integration so far. It's right on track, and I think we've got a real powerful set of capabilities ahead of us.
Thank you. Congratulations.
Yep, thank you.
We have time for one last question from James Faucette of Morgan Stanley. Please go ahead.
Hi, thanks a lot for taking my question. Dan, John, you guys have highlighted a lot of the strong trends and your increased confidence that those can sustain. If we look at your second half guidance and the strength you're anticipating there, how should we think about extrapolating that into the future in terms of what makes sense to think about from a growth and margin expansion and perspective going forward, and kind of what are the key things that we should be looking for in 21 and beyond? Thanks a lot.
Sure, James. This is John. I'll take that. There's still some uncertainty out there. I think macroeconomic uncertainty, as well as how the overall path of the virus plays out. And so it's still a difficult environment to forecast in. We feel comfortable enough about the things that we're seeing in our business right now, though, to provide second half guidance. But I think the broader question is, what does this do to our medium-term guidance? And I think it's very difficult to argue that there are not structural benefits to what's happening to our business. I mean, there are definite secular tailwinds that I think are going to have us really rethink what that growth trajectory is over the longer term. We're obviously not prepared to provide that today. We're just updating or reinstating our guidance for the year, but there are definitely compounding benefits that are coming to our platform. And some of the things that we've all talked about as being trends that would eventually take place, like using contactless payments in store, they're happening right now. We've talked about the death of cash for years. Well, maybe this is that inflection point, that seminal moment. And so we believe that PayPal, given our position, is a structural winner in that scenario. And certainly I think it gives cause to rethink that medium-term guidance, but it's definitely premature to do that at this point in time.
Yeah, if I can just add into John's comments. I think it's clear that we've tipped into a digital-first economy. Look at the number of merchants that are coming onto our platform, 1.7 million in just one quarter. We have conversations with merchants around the world, large and small, all of them trying to figure out how do they implement their digital strategies in an accelerated fashion. If you look at market research that just came out from, for instance, the Business Roundtable, that, where 70% of consumers say they're going to shop online more frequently and expect to continue to do so because it's easy and convenient. And so, when I look at all the different industries, we are clearly becoming a digital everything world, and that acceleration has happened and it's going to continue to happen going forward. And there's sort of one market research study after another. And as John said earlier, when we look across the world, we look at, countries that have opened, where now 80% of retail is open. Before there was maybe only 30% of retail open. You're still at very, very high levels, and still high levels of daily active users compared to last year. So my view on our medium term is there are way more opportunities than there are challenges around that. We need to see another quarter or two, but it's likely that goes up. I mean, that's probable, and we are investing into our growth as well. And when we invest, we expect a return on that investment. And so I would say, we feel good enough right now that we've reinstated 2020. We feel great about the opportunities. We're investing in them, and give us another quarter or two, and we'll provide updated guidance on medium term as well. Okay. Well, listen, I just want to thank everybody for your time today. I just want to say again that I hope all of you and your families are safe and healthy, and we sure look forward to being able to see all of you in person again. And so thank you for your time. Take care. Have a good rest of the evening. Bye-bye.
This concludes today's conference call.